We are in the thick of the earnings, and M&M did report its numbers this time around. So let's go across and listen in to the management itself.
Not just the SUV revenue market share, but also the LCV, less than 3.5 ton market share, which is now 51.9%. We've crossed the 50% threshold on this, so up to 30 basis points. And for farm, while market share has increased, farm machinery revenue is up 12% as well. As I mentioned, we shall talk about achieving full potential now for Mahindra Finance and Tech Mahindra. You see the GS3 and asset under management numbers for Mahindra Finance and for TechM, some green shoots in telecom, or green shoots in BFSI and healthcare, some new deal wins in telecom, and getting back to a margin recovery path. So overall, as we have promised in the past, a consistent delivery on commitments. ROE continues to stay around 18%, which we have promised. And EPS, we had promised a 15 to 20% growth from F21 onwards. At this point, it's significantly higher than that and continues on a good trajectory. With that, I'd like to invite Rajesh to talk about Auto and Farm.
Hi, good afternoon, everyone. I'll start with farm, and you can see here we've had a very healthy volume growth in Q3, 20%. Exports have been up 14. Anish just spoke about the market share, so 2.4 percentage points gain in the market share, which is our highest ever Q3 tractor market share. This gives you the trend line of where we are on the market share. You can see that we've gained through the year 1.7 share points as well. Farm machinery, again, continues to grow at a reasonably healthy rate. On a YTD basis, that's at 20%. The revenue is up 11%, and the PBIT is up 29% for consolidated. So that includes our global subs. And the margins on the right, what you see is the core tractor margin, which is now at a very healthy level of 19.5%. Just to recap, core tractors is domestic tractor business, plus the exports that we do from India, plus farm machine. Sorry, it excludes power all and farm machines. We always show you this chart to show you the steady rate or the band in which we operate our margins, irrespective of what's happening to the industry. And the gray line shows you the volatility in the industry. But the ability to maintain margins, and of course now you can see it going up to 19.5% as Q3 demand has got stronger. We expect the industry to grow at 15% plus in Q4, which will take us to an annual expected industry growth of around 7% plus. And there's several positive factors that we are seeing which are enabling that, one of which is the reservoir levels, which are at a very good level, 16% over the long period average. The Rabi sowing has been pretty smooth. It's at 103% of the Rabi area has been sown.
All right, that was the management of Mahindra and Mahindra talking about the quarter gone by for them.